Recording in progress.
Pamela. In this video, I will be revising some of the ratios that you need to know that they might ask you to use to calculate the value of your trading stock. And these are just ratios. All of them have trading stock in them. The first one I'm going to start with, they've never really used this for IEB. And that ratio, they actually used it for students to calculate inventory last year, if I'm not mistaken, where they were calculating trading stock deficit or surplus, if I'm not mistaken, right? And with acid test ratio, why do I use this ratio to calculate the value of inventory? It's because the ratio has inventory in it. And the formula for this ratio will be current assets minus inventory is to current liabilities. It basically determines the company's ability to settle its short-term debt without relying on its trading stock. Let us look at the statement of financial position that we've got here. You will notice that we do not have inventory for 2020, but we do have inventory for 2019. And we need more information. They gave us the acid test ratio, which is 3.1:1 for the financial year ending 28 February 2020. We need to calculate the value of inventory for 28th of Feb 2020. How do we go about doing that? You use the ratio that is already given to you, which is 3:1. I will first start by writing the formula, which is current assets minus inventory is to current liabilities. Now, when I look at my current assets, they amount to 7 billion, but I'll just write it at 7,000 here, and then I'll minus my inventory, of which I don't have for 2020, and my current liabilities for 2020 were 2 billion, which is 2,000. I'm just going to write 2,000 here. Basically, for this ratio, I have current asset, which is 7,000 minus inventory of X is to current liabilities of 2,000. And the thing is already the ratio has been calculated for you, which is 3:1. 3.1:1, meaning that 7,000 minus X is 3.1:1 of that 2,000 rand. Now, I wrote the ratio with X, and then I wrote the ratio that I was given. Once you have done that, you cross multiply. Okay, the ratio on the left, you multiply it with the first part of the ratio will be multiplied with the second part of the ratio in the second equation. And similarly, I will take 3.1 multiplied by 2,000. Now, what am I going to get here? I will end up having 7,000 minus X is to 2,000 times 3.1. On the left, I will have basically 7,000 minus X. On the right, I will have that 2,000 times 3.1 will give me 6,200. And then you manipulate this by transposing 7,000 to the right. You'll end up having 6,200 minus 7,000. That will give you negative 800. And then divide both sides by negative. X will be 800, which is the value of your inventory for 2020. It'll be 800 million. Note that everything here is in millions, so it'll be 800 million. All right. Another ratio that has inventory in it will be your stock turnover rate. And your stock turnover rate, I will start with the formula. It's cost of sales divided by average trading stock. And this ratio determines how fast the stock is selling or how often you sell stock in a year in most cases. Under inventory is normally according to the period that you're given there. And let us do one example on that. So if we had to calculate our stock turnover rate here, it will be for 2020, obviously, it will be that 2.5 and divided by average trading stock. Average trading stock is basically your opening stock of inventory, you add it with the closing stock of your inventory, and then you multiply that by half. So you get the answer and then multiply that answer by half. But for last year, we had inventory amounting to 1,600,000,000, which is 1,600 in simpler terms, okay? And for this year, we don't have our trading stock. Now, that is a problem because it means we cannot calculate our stock turnover rate. And since we can't calculate our stock turnover rate, they should give us something. And you will notice that they have given us the stock turnover rate, meaning that we can use that to calculate our inventory, which is what they asked. They asked us to calculate our inventory. How do we substitute that? We'll start with cost of sales. Numerator will be that 2.5. Your denominator will be half times x plus 1.6. And obviously, on the left-hand side, on the right-hand side, sort of to say we've got 2.5. And on the left-hand side, it's 2,500 divided by half times x plus 1,600. And you will notice that on the right-hand side, it's not really a fraction. So I will just change that into a fraction, write it and divide it by 1. I will just divide it by 1 so that I can just cross multiply. So I will multiply the denominator on the left with the numerator on the right, and the denominator on the right with the numerator on the left. Okay, so just cross multiply. Now, on the left, I'll have 2,500. On the right, I'll have 2.5 times half of x plus 1.6. Then I will just multiply these two to break the bigger bracket. I'll just multiply these two. They will give me 1.25. And then divide both sides by this 1.25. And this is the answer we'll get, which is 2,000. Then transpose that 1.6. You'll have 2,000 minus 1.6, and that is 400. So the value of our inventory here will be 400 million. Right? Let's move on. Then we've got stock holding period. Now with stock holding period, I gave you two formulas here. The first formula, you will notice that it has average inventory or trading stock. Average trading stock is opening stock plus closing stock. Then you get the value, then you times that by half, or you just divide it by 2. So same thing. You will use the first formula. So you will use this formula here. If the question asks you to calculate stock holding period in general, so we use that formula. If the question asks you to calculate how long closing stock for a specific financial year will be on hand, you use the second formula. Now, you will notice that the difference between the first formula and the second formula is that the second formula does not have average. And I know that most of you will probably be struggling as to how do we know which formula to use? I think it's better to explain it using an example. Now, let me start with this example here. Okay, in this example, we don't have inventory for last year. We don't have inventory for this year. So we know that somehow we have to calculate inventory for this year. The period for which the closing stock on the 28th of February 2020 is expected. You see, here they've been specific. So the period that we're given is the period we expect to have closing stock, which is closing stock on the 28th of February 2020. So that closing stock, only closing stock for 2020, we expect to have it for 182.5. Do you see? Only closing stock for 2020. Here they've been specific. So this 182.5, it is the stock holding period for stock relating to 2020, not for stock in general. only for stock relating to 2020. Now, this is forcing us to use the second formula, which is just closing stock divided by cost of sales times 365. We don't have closing stock for 2020, so we'll put it as X, but we do have cost of sales for 2020, which is 2,000. Times it by 365, it's supposed to give us 182.5. And I will just divide both sides by 365. I will have X divided by 2,000 is equals to 0.5. Then cross multiply. I'll just take 2,000 times 0.5. It will give me 8,000 rand, meaning that the value of our inventory here will be 1 billion. Done. Let us look at the next example. In the next example, we have inventory for 2020, but we don't have inventory for 2019. So they need to give us something here. So they're giving us our stock holding period. They're just saying a stock holding period for the year ended 2020. So they're not saying we expect closing stock on the 28th of February 2020 to hold on to it for 73 days. They're not saying that. They're just saying stock holding period is that. In general, that is stock holding period. And this is where you are going to use your average inventory or your average trading stock. Now, what is your average trading stock? You will take that 600, add it with X for 2019, and then multiply by half. But you will use your cost of sales for 2020, which is 2,500. Then I will divide both sides by 365. On the right-hand side, I'll be left with 0.2. Then multiply both sides by 2.5. On the left, I'll be left with half multiplied by X plus 600. On the right, I will have, it's basically 2,500 times 0.2. That will give me 500. And then I will divide both sides by half. On the left, I'll be left with X plus 600 is equals to 1,000. Then take the 600 to this side. When you take 600 to this side, it will be negative. So I'll end up having 1,000 minus 600, which is 400 million. That's it. Now, this is just a short revision that I normally do, especially when I'm going to ask a question like this, which is your cash flow statement. Let me not do this. I took it from November 2020. And you will notice that I don't have inventory for last year. So they need to give me something that enables me to calculate inventory for last year. And according to the ratios that they gave us debt to equity, which will not help us. However, they also gave us a rate of stock turnover, which is stock turnover rate. And for 2020, it's 11. And using the formula, you should be able to calculate the value of your inventory for 2019. All right. That's why I had to do those ratios just to refresh your mind and enable you to answer this specific question. Try it out. And for solutions to this, please check out podcasts, and under podcast, look for cash flow statement. That's where you'll get solutions to classwork 3. And what we just did will help you, will come in handy in doing classwork 3. Thank you for watching again. I really appreciate it. Koto.